Bernard Reilly, State Street Global Senior Managing Director. It's the world's largest institutional money managing, overseeing $1.7 trillion. Bernard, good to have you with us on the show. Lots of uncertainty in the market right now with Greece, where it is at the moment. Germany and Greece now saying an IMF bailout is an alternative. How is that likely to affect market sentiment?
I think, Haslinda, good morning, first of all. I think you see on the sentiment side, institutional investors in particular, those that we see in Asia Pacific, are still clearly looking to put more risk back on the table relative to where they were last year. So I think the Greece issue is one that they're probably less concerned about. I think they'd be more concerned about other markets should you see that flow through to them as well.
How about liquidity? I mean, some people are saying the market is soaked with excess liquidity right now. Are markets overheating? What's the risk of a sell-off?
I think from an institutional perspective, you're seeing clients actually putting more money into the market. So I think a sell-off, while it could always be likely, and you could find issues particularly that drive that, shocks to the system, again, and you mentioned Greece earlier, something bigger could have that impact. But at the moment, we're seeing institutional investors putting more money to work in the equity market as opposed to less. And in terms of investing, what's the best way to go? You're saying passive investing is it? Well, I think we're a little bit agnostic because we actually manage both assets on a passive basis as well as an active basis. But we've seen in the last 12 months heavy flows into passive equity strategies. And I think there's a long-term trend with that because in the past where clients would put money into passive, it was because of the diversification elements and the low-cost aspects that passive investing offers you. But what we're also seeing now is clients actually putting money into tailor-made type passive strategies. So they could be strategies that move away from cap-weighted benchmarks. They could be wealth-weighted, or they could be low volatility type strategies that are run on a passive basis. So I think it's a new generation of passive investing that we're starting to see take hold, and we are seeing that resonate here in Asia Pacific.
How about ETFs? How are they looking?
Oh, in Asia, globally, I think they're on the rise. In Asia Pacific, we're clearly seeing there is great demand for ETFs. I mean, if I think about where we were 10 years ago, just over 10 years ago, when SSGA launched the first ETF in Asia Pacific, being the tracker fund of Hong Kong, demand was less than stellar because I think the market didn't understand what ETFs could offer, that being low-cost, transparent and liquid investments. Whereas if you fast forward now 10 years on, you see that the market is much more developed. I think it still has a long way to go, but clients, retail and institutional, are really starting to find them of interest in their portfolios to manage their risk as well as to give them some broader exposure than they may otherwise have.
Are ETFs also attractive because of the volatility that we're seeing in the market?
Well, they can be, because ETFs, you can use ETFs both to go long or to go short. So it enables you to take a view one way or the other. So unlike a lot of managed investment funds where you can only really go long, an ETF enables you to go short. So you can take advantage of that volatility in the market, as you say, if you have that view that markets are going to go down.
And is it fair to assume, given where commodity prices are right now, that commodity ETFs may be a good bet? Gold ETFs, for instance?
Well, gold, I mean, we've seen the gold ETF that we manage in New York and we've cross-listed here in Hong Kong, in Singapore and Tokyo in the last 2 years has been a huge success for us. Retail investors and institutional investors have been buying gold. So I think gold does represent a form of diversification for investors. How
about commodity ETFs as a whole? Your thoughts on that?
I think they have some clear advantages. I think when you're looking at ETFs, I think you've got to be really clear about the instruments that you're holding, though, as well. And so you want to make sure that the ETF isn't the instrument that's driving the demand part of the equation, whereas gold is a very liquid instrument. So having an ETF around gold clearly, we think, makes sense. But on some other commodities, it may be less so. And you want to also be careful about making sure that you're holding the hard commodity as opposed to holding a financial instrument that represents that commodity.
Bernard, before we go to break, what do you think is the top trade we should make in 2010?
Oh, I think having exposure in local Asian currencies is clearly something that investors should consider. I think we're seeing the secular decline in the US dollar. One way to get traction in that is through Asian local currencies. That market's got liquidity, and it's developed quite a lot in the last 5 years, and you can access that through listed, an ETF that we have here in Hong Kong. That'd be my trade for the year.